Turkey is a country located at the crossroads of Europe and Asia, with a rich cultural heritage that spans millennia. It has a large and diversified economy with major industries including textile, automotive manufacturing, and tourism. Here we can see the current economic situation of Turkey. Its GDP is around 82,000 crores USD in 2021. The country's economic growth has slowed down, with economy contracting by 9.9% in 2020. The Turkish economy is facing several challenges including high inflation and currency devaluation. The COVID-19 pandemic has also laid a significant impact on the country's economy, particularly in tourism sector. Now we will talk about the monetary policy of Turkey, which has led them to this situation. So, starting with the definition of monetary policy. Monetary policy refers to the decision taken to influence the availability and cost of money in order to achieve targets such as economic growth, employment growth, and price stability. The central banks are responsible for implementation of monetary policy. So, in case of Turkey, the Central Bank of Republic of Turkey, also known as CBRT, law sets the primary objective of the central bank as to achieve and maintain price stability in Turkey. The CBRT uses a variety of tools to influence the monetary supply and interest rate. One of the key tools is policy interest rate. It is the rate at which the CBRT lends money to banks. By changing the policy interest rate, the CBRT can influence the interest rate that banks charge for their customers to give loans and other financial products. When the policy rate is lowered, the borrowing becomes cheaper and consumers and businesses are more likely to take out loans, which ultimately can stimulate the economic activity. When the policy interest rate is raised, the borrowing becomes expensive, so consumers and businesses may be less likely to take out loans, which can help to cool down an overheating economy. The second tool that CBRT uses is reserve requirement ratios to influence the amount of money that banks must hold in reserve. When the reserve requirement ratios are increased, banks have less money available to lend, which can help to slow down inflation. Conversely, when the reserve requirement ratios are decreased, banks have more money available to lend, which can stimulate economic. Another tool that CBRT uses is open market operations, which involve buying and selling government securities in open market. When the CBRT buys government securities, it injects money to economy, which can stimulate economic growth. When the CBRT sells government securities, it withdraws money from the economy, which can help to slow down inflation. The ruling Justice and Development Party, or AKP, has set 2023 as the year in which a set of ambitious economic goals will come into fruition. According to this vision, by 2023, Turkey will be an economic powerhouse, the world's 10th largest economy with a 2 million economy, a per capita income of 25,000 and export amounting to 500 billions. By comparison, in 2014, Turkey was 18th largest economy in the world, down from 17 in 2013, with a gross domestic product or GDP of 800 billion, a per capita income of just more than 10,000 and 160 billion in exports. Russia currently holds the 10th spot in the world ranking with a GDP that is roughly twice the size of Turkey's GDP. The AKP's stated goals are ambitious to say the least, and many economics believe that they may be out of reach.